70% of Berkshire Hathaway's entire portfolio, sitting in just 5 stocks. This just dropped, and most retail investors have no idea what it really signals. Here's what's really going on, and what you should be thinking about right now. Because this isn't just a fun fact. This is a masterclass in conviction investing. And it cuts directly against everything Wall Street has been telling you for decades. Berkshire Hathaway, one of the largest investment vehicles on the planet, has approximately 70% of its public equity portfolio locked into just 5 positions. 5. That's it. Buffett isn't flinching. He is doubling down on his stock market outlook heading into 2026. Even as volatility spikes and inflation keeps investors on edge. Markets are pricing in uncertainty right now. Rate expectations are shifting. Consumer prices are still elevated. Most fund managers are scrambling to rebalance. Buffett? Barely moving. His portfolio turnover is near zero. He has publicly stated there is a lack of compelling opportunities at reasonable valuations. And he refuses to overpay. That discipline is rare. That discipline is intentional. Here's what this means for you. Concentration at this level, by the most successful long-term investor in history, is not an accident. It is a deliberate, high-conviction, low-turnover strategy built for patience, not panic. But here's what nobody is saying about this yet. Every headline is focused on which 5 stocks Buffett holds. That's the wrong question. The real signal is why the portfolio has barely changed in years. Buffett isn't finding new ideas. Because at current valuations, he doesn't believe the market is offering him enough margin of safety. That's not a minor footnote. That is one of the sharpest implicit warnings about market pricing you will hear in 2025. When the greatest capital allocator alive is sitting on his hands, that tells you something. First consideration. Study the 5 holdings themselves. Understand why Buffett trusts these names through inflation cycles and rate uncertainty. What moat, what cash flow, what durability makes them hold forever candidates? Second consideration. Ask yourself honestly, are you diversified for the right reasons? Or just spreading risk without conviction? Buffett's approach demands you know each position deeply. Owning 40 stocks you barely understand is not a strategy. It's noise. Third consideration. Evaluate your time horizon. Concentration only works with patience. If market volatility is already making you lose sleep, a high conviction portfolio could hurt you. Know your own psychology before you copy anyone's positions. 70% in 5 stocks. Almost zero turnover. An implicit warning about valuations baked into every decision he is not making. What do you think this means for your portfolio? Drop it below. I read every single comment. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.